Well, mortgage rates held at about a half a point higher than the lows that we saw a couple of weeks ago. What's going on with supply and demand in Portland's residential real estate market? Well, let's get into the very latest stats and trends. Thank you so much for joining me this week. It is definitely a confusing real estate market with some price points and some neighborhoods and areas doing better than others. It just proves the old adage that all real estate is local. Feel free to hit me up if you are nervous about your home equity and would like a free market analysis to see where you stand. Now on with the show. The average sale price flopped a little bit this week. The average was up just a hair compared to the previous week and landed a mere 0.9%, so less than 1% over last year at this time. As I've said before, we can get some wonky numbers in our weekly comparisons. We're dealing with a relatively small set of numbers, and that can lead to big swings in our weekly averages. What caught my eye, though, is the average sale prices for the month of October so far, a bit larger set of numbers. The average sale price is only up about 2.3% compared to the same time frame in October of 2023. Those numbers had been running around 3% to 3.5% higher than last year, so it looks like we're seeing some compression with sale prices. I suspect that we will see a reversal in the coming weeks based on the big jump in buyer activity that we saw about 4 weeks ago. The supply of homes for buyers to purchase decreased along with the number of homes that hit the for sale market for the first time this past week. Compared to last year at this time, buyers now have about 23% more homes to choose from. That's down from a high that we're seeing earlier this year, a difference of 33% more homes to choose from. And that number, that difference between last year and this year, is shrinking and is starting to look like a new trend. Price reductions are down from the previous week, but the numbers are still pretty high for this time of year, indicating that a lot of sellers are a little bit nervous and motivated to get their homes under contract. Buyer demand has continued to significantly outpace what we were seeing last year at this time. The number of new purchase contracts agreed to by buyers and sellers this past week was up about 26% compared to roughly the same time frame last year. That's definitely a new trend now. Over the past 4 weeks, we've seen about 17% to 30% more contracts over the number of new contracts we were seeing last year. As I said at the start of the video, mortgage rates have been holding pretty steady at about 6%. That's the best case scenario on the best rate I could find advertised on Thursday morning. The Freddie Mac survey of lenders, which is a bigger, broader survey of all lenders out there who are doing conforming loans, that survey was showing the average right now of about 6.3% for the 30-year fixed. Last year at this time, that number was almost 7.6%. I think that definitely explains the elevated buyer demand that we're seeing this year. So what's coming down the line for us? This week we got a couple of public comments from Reserve Board governors that said we should be more cautious about future rate cuts and that future rate cuts might be a little more modest. Of course, that next Fed meeting isn't until November 6th, and we'll get a ton of economic data and inflation reports between now and then. The yield on the 10-year Treasury, one of our best indicators of where mortgage rates are headed, had been creeping down for a couple of days, indicating that mortgage rates might do the same, but a strong retail sales report and a low jobless claim report sent the yield back up to where it was last week, so we lost the ground that we had gained. So that means that we probably won't see much movement in mortgage rates, at least not in the short term. Definitely check in next week for the latest developments in the Portland real estate market. If you haven't hit that subscribe button, please do to make sure that you don't miss out. And I look forward to seeing you right here next week.